Welcome to Economics Happy Hour. My name's Matt.
Hey, my name is Jadrian.
It is mid-May, graduation season over for our two schools. I know some schools still have commencement coming up.
Our friends on quarter systems, I think they have several more weeks left of school.
Yeah, but how did everything wrap up at Virginia Tech?
You know, really well. But I'm also going to say I'm in a good mood because I got my evaluations back today. So that's also why I'm going to say it went really well.
Nice.
Yeah, I think no real major issues. I think the Canvas outage caused more of a headache than I was prepared for sure. I thought originally, so Canvas went down Thursday night. I had a final presentation Friday morning, got extended to Sunday, and I thought, no big deal. That's fine. I'll worry about it later. And I foolishly thought that I could grade this project while I also had my other finals. And so I got
Ooh,
pretty backed
okay.
up during the week. But once I got out of it, no, everything's been fine. Really surprisingly, calm emails. I don't know why.
Okay. Okay. So I mean, I'm used to smaller classes.
Hmm.
How many emails would you get between when your last class is, like from your students in your classes, from when the last you leave the last
Sure,
lecture
sure.
until, you know, a week after finals? Approximately how many emails are we talking about from students in your classes?
I'm trying to work on it in I'm gonna say magnitude. Like it's not three digits. It's not 100 emails.
Okay.
It's I could comfortably say in a normal semester,
Yep.
dozens.
Okay.
Probably 20 to 30 emails.
Okay.
Most of those come almost immediately, like as soon as the grades are posted. Some of them come before the grades are posted, but I mean within 30 seconds of the grades being posted, I will get emails about their final grade, curve them up, extra credit. I get much fewer extra credit emails than I used to. They really all just now say, "Can you please round me up?"
And the answer, I assume, most of the time is no, I cannot, because you
What
have
do you mean
thought of
most?
that
What do you mean?
before.
What do you mean most of the time?
Yeah, yeah,
All the
that's
time.
fair. All of
It's
the
all the
time.
time.
Yeah.
I already give, what I tell them? I go, you have plenty of opportunities in class. I
Yep.
give bonus for clicking into answers. I give bonus for being there on certain days. There's bonus for turning in the first assignment that's not graded. There's bonus for checking your lockdown browser before the first exam. I got a string of things I want you to
Yep.
do that are bonus.
Yep.
If you can't
Yep.
do it during the semester, I'm not giving you extra work at the end.
Yep. Yep.
Definitely
No.
not curving you up.
Well, and I mean, there's an equity issue because if you give it for the
Yeah.
students who ask, what about the students who worked hard but wouldn't ask for that? Or, didn't work hard and wouldn't ask, whatever the case would be. But like, I mean, it's not really fair to just give it to the kid who asks versus the one who doesn't ask.
And one of the things, I don't know if we talked about this in a previous episode, but what is sort of surprising is that I tend to take a hard line on saying no. I don't have a problem saying no to them. But I know that there's other professors who don't, and I will say I disagree with your decision, but it's largely your decision on how you want to run your classroom.
Hmm.
But I often think about exactly what you just said. The student who asks if half of their grades get bumped up one category,
Yeah.
if half of their classes go from B pluses to A minus, that is a significant change in their GPA.
Yeah, it's highly
To
unequitable, right? I mean,
I,
it's,
I personally think so. Just because
yeah,
somebody asked, you're going to give it to them. I think that's
yeah.
inappropriate. But like teach the academic freedom, you can do your class how you want, I guess.
I see. Yeah, yeah.
Maybe we should have a guest on who says they do curve their final grades, and then we could
Well,
talk about
I mean, I
just
don't mind
why.
curving the final grades to me is
Mm,
different. It's what do you do for,
bump
yeah, would you
ups.
do bump ups for just some students and not others based on them reaching out? I guess
Yeah,
I don't have a qualm with somebody bumping up, if the professor objectively looks at it and says, I think it's actually right to bump this up for reasons X, Y, and Z. Hey, that's
you
fine.
did really well in the final. You crushed the final.
Yep, yep,
Yeah,
whatever
sure.
it is.
I
Yeah,
get. I don't have problems with that.
yeah,
I truly don't have problems with that because in my mind you have a reason for
yep,
doing it, and that reason is not just because somebody asked. Uh,
correct,
there's also I will say
correct.
on the other side of it is if that were true, you really should have done that before you posted grades so that they don't have to ask. But whatever. It's
That
big
is that
classes are
is
hard to
that is
do.
probably true. That is probably true. So, what's your beverage of choice on
Matt,
mid-May?
last week, so not this past weekend, but the weekend before, had my TAs over to celebrate the end of the semester, hosted a little barbecue, a little grilling. So I bought a pack of local craft brews and then I
Nice.
forgot that students don't drink craft brews. So
Uh-oh.
I have a lot of craft beers left. I am having a Hardywood Pils out of
Okay.
Richmond.
I am pretty
It's
certain I have never had that one. So
Oh, and because we had a party, I'm gonna do
the
it out of the solo cup.
the blue
So
solo cup.
got a
I
blue
am
solo
having
cup.
a Big Oyster Brewery
Ooh,
Hammerhead IPA.
okay, very
Uh,
nice.
so it's one that I think I might have had one other of this four pack already, but it's
Okay.
basically a new beer for me. And if
I
I
do
remember,
regret not. I would say I do regret not grabbing one of the other beers. It's in my new beer fridge in the garage. I did get one of the PBR pickle beers, but they're in
pickle
the
beer.
garage. So the next time around.
Yeah, so I know my daughter in Pittsburgh loves Picklesburg, the
Hmm.
festival all about celebrating Heinz and their devotion to pickles and all of the stuff. I don't know. But
I would love to go.
yeah, yeah, it's an event. It's an event. So, okay, well, cheers.
Cheers, Matt. Click. It's time for name that stat, and I think
Yep.
I'm going first. I
You are
believe is
going
the
first. You are going
okay.
first. So,
My my number is 33,500.
well, I'm gonna, is that
You
the
already know it.
extra amount that someone with a bachelor's degree makes over someone with a high school degree? No, I didn't
No,
get it.
no, it's not. Like that is not correct. I let me be I maybe I'll give you an extra attempt because technically the way that the data is written in the article is that it is more than 33,500. So
Okay.
it doesn't have an exact number, but I don't know if that wants to change your answer or not.
Okay. No, I mean the first one. I think my first one. Well, part of what we talked about before. So I was
Hmm.
thinking basically premium to a college degree. So clearly that's
Okay.
not correct.
So I can give you a little bit more information. 33,500 is the total number of something, and that number has increased by 69% from 2005 to 2021. So today it's at 33,500, and it has increased 69% over 2 decades.
Number of econ PhDs.
It is not the number of econ PhDs. There's
Okay.
no way there's that many people, right? That's
I don't
oh, maybe okay,
know.
maybe total. Okay, never mind. I'm thinking per year.
Yeah,
Sorry.
yeah,
Okay.
yeah, yeah. I don't really know what the total number would be, but I would think on that. But yeah.
Interesting. No, it is not that.
Okay.
Oh, what do I want to give you for your third clue? Um, I will tell you that the data is reported by the Post-Secondary Education and Economics Research Center.
Okay. So it is something about higher ed, but this is more
Yes.
about people. So it's a number of it sounds like it's more or less some unit other than a dollar that we're
Hmm.
talking about.
But I can't
Um,
tell you the unit because the unit is
yeah,
what
yeah,
it.
the unit would
Yeah,
give
okay.
it away. 33,000. You said 33,500.
500. Hmm.
33,500. And this is up dramatically, and it's something to do with higher ed.
Hmm.
Okay, there's about 4,000 institutions within the US. So, I mean, I don't think could it be worldwide institutions? We'll say worldwide institutions of higher education.
It is not. Matt and I got on a
Okay.
kick right before this about the returns to college.
Yeah.
Matt, this is the number of graduate programs in the United States. There are
Grad programs. Okay.
33,500 graduate programs.
Okay.
Graduate education has increased 69%
Yeah.
over 20 years.
Okay. That's interesting. I mean, there's some number of colleges and universities. Some of them don't offer graduate programs,
Hmm.
but then of the subset that do, many will offer 20, 30,
Several.
40,
Yeah.
100. So, okay. No, that's fascinating. I hadn't thought about that. Yeah, we talked about potentially higher ed as a topic, but went a different way. So, okay, I'll go 9.1.
That feels like a rate. Is that the, hmm, I don't want to say it's the unemployment rate. That doesn't feel right. 9.1. So to be fair, I don't know if you switched out of our answer because you said originally you were going to do education related, but then you said you might have switched it. So let me make it easy. Let me say 9.1 is the unemployment rate for somebody without a high school degree.
That's my guess is that's probably ballpark. I don't know what that rate is, but that is not the stat I was going, and I did switch away from
Oh,
something
dang it.
education
Okay.
related. So I will tell you it is a rate though. That for the second one, it is a percent.
Okay. 9.1%. 9.1%. Hmm. It's not now. See, now all I have in my head is education related. Let's say 9.1%. I don't even know where to
Yeah,
pivot because of this. 9.1% increase in the amount of waiting time at TSA because of the shutdown.
I have no
That's
idea
a-
how accurate that is. That isn't it. And now I need to figure out how to give a third clue that makes it a little bit more plausible that you could get it without just completely giving it away.
okay.
Okay, we'll say this is 9.1% represented a, what would we call it here? We'll say it's a maximum or minimum within recent history.
Oh, I feel like I saw a headline about this. I did see something about about an extreme. Where did I see this? 9.1%. Uh, is it the increase in the price of gasoline over a 1 month period?
No, no. And this was going to be a tough, well, it might not have been a tough one if you thought back to what is the topic for today. 9.1%. It's the highest inflation rate we have had in any given month since the 1980s. And it did happen in June, I believe it's June of 2022,
Hmm.
which I thought that could be the pivot into today's topic and our new series of videos, which should get us, at least for a few months, we kind of know what we'll be talking about now. If anybody's listening, feel free to slip us in topics. There's no reason we can't take a break between this. But we want to start a series, and we're going to start with the current decade and move backwards, decade by decade. And here we're going through the economy in the 2020s. So there's a few different things I would like to kind of think through and maybe try to hit on each of these. I'll just quick rapid fire mention all of these, and you may have others you want to bring
Okay.
up. But what's the biggest economic event? Do you see any biggest policy blunders? What can we say about inflation? What can we say about unemployment? What can we say about recessions, income growth? Kind of some of the standard statistics. Biggest economic event since the 2020s. This one is will probably be the single easiest. Well, there'll be some others that might be easy as well,
Right,
but
the
this one is,
2000s, I feel like we're safe in the 2000s.
yeah, the 2000, the decade of the aughts will be another
Yeah.
easy one. But I mean, it's COVID and nothing else could compare to COVID, right? I mean,
Ooh, okay, Matt. Actually, yeah. So this might actually be pretty good because so I was originally gonna say the pandemic, obviously a massive economic change. You could also say uh, AI has radically changed how we approach the workforce, concerns,
yeah, maybe you're.
pessimism. I don't know. I'll throw that one out there as AI is also probably worth mentioning in there. But I still do think it's probably the pandemic. I mean, the pandemic was huge.
Yeah, it's a good question. And I think at this point, I mean, people are talking about the massive disruption we're going to see from AI. To this point, the overall unemployment rate has not been
Hmm.
too adversely impacted by AI. Now, it doesn't mean there aren't sectors. It doesn't mean there aren't jobs that are tougher to get into.
Yeah.
You hear about it's a little bit more stagnant in terms of new hiring sometimes, but that's a, I would be interested in maybe revisiting this one, 3 or 4 years from now and sticking with
Well,
this. But
yeah. Well, this is going to be really curious. So, you said 3 or 4 years, but I mean, fast forward 20 years. Do you think people will remember how AI changed the workforce more or how the pandemic changed? I mean, you take the pandemic, you have obviously like the just everything that happened healthcare wise, policy wise,
mhm,
supply chain wise. But I mean, that basically introduced work from home that really didn't
it did.
exist uh, like in the years before.
Yeah.
Online education changed. I mean, like a lot changed. I'm curious if you think the bigger news issue would be the pandemic or AI. And I think we're obviously biased because we're living in the AI moment right now. I sometimes think people forgot just the impact that the
Yeah.
pandemic had. I mean, we have conversations as though like we've always been working from home. And so the idea that we would ever go fully back in the office sounds crazy. And I go, it wasn't that long
Yeah.
ago that we were fully in the office, that
Yeah.
exams were on paper. Like,
No, that is a good question. I do think 20 years from now we would probably, and maybe we're wrong, but I think everybody would say AI.
okay.
Um, I think, but I mean, there's a couple parts about the pandemic. There's just the massive disruption and the supply chain shock. And then the policy responses, which I think led to some of the economic issues that we later had. And not all of them were necessarily wrong, I don't think, but
Hmm.
would have had trade-offs. Uh, that part's been enormous so far. And whereas AI hasn't hit the unemployment rate, it hasn't hit the inflation rate.
Yeah.
The That is a fascinating question, though. But you're right. The work from home became much easier, and in some ways that makes things better. And in some ways, gosh, if you're not feeling well, sometimes it was nice to just like,
Yeah.
I'm gonna do a sick day today. And now, if you're like, I'm doing a sick day, you're like, well, that's fine. Just zoom into these 5 meetings, and makes life maybe a little bit less relaxing than it
You
used
know,
to be.
you used a phrase in there that I think is really important. The pandemic was definitely a shock, and I don't feel like AI is actually a shock. So the pandemic really just sent everyone home, and we're over a 3 month period scrambling to figure stuff out.
Hmm.
ChatGPT has been out for 4 years. It came out in, I think, in 2022, and we're still trying to figure out, well, how is this going to affect people? What should they learn in class? It's
Sure.
there. Like you see it in, like, AI is everywhere for better or worse, but it definitely
Yeah.
doesn't feel like the shock that the pandemic gave us. And so maybe that's really the difference, is that there was a pandemic shock, and then AI is more of a, I don't want to get like too pre, is it a revolution, right? Like,
Yeah.
is it like the industrial revolution that's going to take like we look back in time and say, well, look at these 10 years of the AI adoption versus the
And
pandemic was really just 10 months of
sure.
changes.
Sure. What will be interesting, I mean, because of AI 20 years from now, most people, will there be half of the cars on the road being driven autonomously? Right?
Yep.
Then all of a sudden, these are massive, massive shocks, but we're just not quite there yet. So it'll be interesting. Pure disruption. You're right.
Hmm.
Like a, momentary what just caused the world to flip upside down. Um, I don't think there hasn't been anything else in our lifetimes, has there? I mean, the only other event I can kind of think about that seemed like the world kind of turned around was 9/11, but it wasn't this economic shock. Uh,
I guess you could say the stock market crash of the 1930s. Wait, was it
yeah,
Red Monday? I
well,
think it
yeah,
was
the
called.
30s. I was just thinking our lifetime. I
Oh
mean,
yeah.
yeah. So, I was born in 50 years ago in June. So 50 next
Well,
month. So like since 76. So since the
maybe, I mean,
bicentennial, I don't
mhm,
think there's that much. I don't think there's
yeah.
anything that comes remotely close to just such a huge short-term massive hit to I mean, the unemployment rate spiked. What was the maximum unemployment rate for COVID without looking this up? I mean, I did it hit 20%?
I don't remember that, so I'm going to be bad about that one.
Yeah, yeah. We'll look this up quickly. Inflation lagged, but then we're still sort of dealing with the residual. I think we're still dealing with this residual issues with inflation. Now, there's other factors that might
Yeah.
be propping it up a little bit. And it's not too bad in the US, right? It's still under 3%. And are tariffs a portion of this? Are the gas prices from conflicts a portion of this? Probably, yeah, probably a portion of it. But I think we may have some remnants still of COVID.
So I'm going to give you one that technically you were alive for. You don't remember this, but maybe you can talk about it. The only other one, and this, I mean, we're jumping ahead to all our other decades here. With
Black
the
Monday?
only, no, I was going to say the Iranian hostage
Oh, yeah.
situation, spiking gas prices in the 70s. Like, other than that, I can't think of other major events that would have just like very quickly changed things.
Yeah, yeah. And yeah, I was too young for
No,
the
that's why it's
hostage
like
thing. Yep.
that would have been it. So, Matt, one of the things you brought up was policy-based things that I guess, with the benefit of hindsight, you got a lot to pick from. You have everything from, and then you mentioned broadly pandemic policies, but I can think of things like PPP loans,
Yep.
enhanced unemployment that was happening.
Yep. Yep.
You could take, I think we had several rounds of stimulus checks. I believe three,
I believe
maybe
so. Yeah.
three.
And
But you know, we could also take trade wars. We have tariffs
yep.
that have kicked in. Basically, the breakdown of NAFTA. I mean, pick your poison, Matt. What policy do
So
you
if
think
I
you
were
want to
to
go with?
say what would I think was probably good policy
Okay,
and definite and should have happened, I'm not going to say perfect policy, but
sure.
probably good. Something doing the first stimulus when COVID first happened.
Okay.
I think that was just a smart thing that probably had to happen. You have to provide some comfort. I mean, the unemployment rate, I did just look this up. It spiked to 14.8%.
Okay.
Um, I could have a lot of different quibbles about how exact policy was written. I don't think it was smart to necessarily up the amount in the unemployment checks by, I think it was
Hmm.
600 per check, regardless. That's just an incentive to maybe stretch out. I mean, that's a lot of money per week. So
Sure.
so I could quibble with a lot of these, but I do think something, helping to keep businesses from folding, that was
Hmm.
probably good policy. I would think the second one, which I believe the second one was still under the Trump administration, was bad. And I think the third one, which was under the Biden administration, is probably, and it's tough to say this because I think could make a very good foe for this. But if I'm going to point out what I think was the worst policy mistake this century, I think it was the Biden stimulus package. The unemployment rate was pretty much under control by then, and I think that helped lead to the inflation that we ended up seeing. Um, a
Are you
little
going to
bit
pick
like
the whole? Is that the CARES Act or is that the American Rescue Plan?
should be the one that
I
would have
think
been in
that
like March of 21,
I think
whatever,
that was the
whenever that
American
was.
Rescue Plan. I think the CARES Act is the first one. Are
Yeah,
you
I
going
would
to book
think.
the entire CARES Act or just the stimulus part,
I
or yeah,
honestly
whichever
we
act it
didn't
was?
didn't look up enough to
Sure.
tell like
Okay.
what parts in there. I'm sure there might be something in there. I thought, oh, this is okay, but overall, I mean, that was a massive stimulus bill at the time when our economy didn't really need one. And
Hmm.
I think I recall going into it, a lot of it's for pet projects that the Biden administration wanted, and don't think that it necessarily. Yeah, I could make a good argument I mean, that happened in March of 21. I think you can make a pretty strong argument that that's probably one of the leading reasons we ended up having maybe helped lead to the higher inflation rates in June of 22. Is that's just that wasn't needed at that point in time. But I think a good contender would be the
Well,
insane the tariffs and
the
all of the
tariffs,
disruption
right?
from the Trump administration.
So here's where I'm going with the tariff part is that, and so I don't disagree with you. Let me start with that portion. However, we have the benefit of hindsight. And so I do remember that even in March 2021, I think if I remember, there was a sort of a second wave of COVID stuff happening. I don't believe the vaccines hadn't fully rolled out in 2021, like in March of
Well,
2021.
yeah, they were out, but not everybody could get them quite
Yeah, it
yet.
was, yeah,
Yeah, yeah,
I will say there was some weirdness where, yes, the economy was getting better. Some of that is also how we measure the economy, which I think might be a separate conversation
sure,
that we can
sure.
go down in a second. Um, Things are looking better, but maybe just because it looked so bad right before. There's not a good reason to have tariffs. And it's
No,
really
sure.
hard to, uh, you could say, let's tariff Iran, North Korea, fine. To put tariffs on Canada and Mexico, which you had just signed a trade agreement with,
Yep, yep, yep.
that I, my argument would be only in that, at least with the third round of stimulus checks, no, with hindsight, that's probably a bad idea. In the moment, maybe it was like 50% bad idea, 50% we don't know where it's going. I'm only going to pick on the tariffs as a dumb policy in the sense that we know that wide sweeping tariffs are just dumb,
Yeah,
and that targeted tariffs are the only ones that really kind of make sense for some sort of purpose. So if I was going to pick a dumb policy, I would pick one that says, you know, it's a dumb policy and you did it anyway, versus it was dumb in hindsight,
yeah,
or maybe even the scale of it was dumb in hindsight.
yeah. No, and I mean, I think that's a fair point on the tariffs one. It's like just, why? I just think the impact of this rate of tariffs
Sure. Okay.
is is just it doesn't quite impact the economy as much. That's where I'd go for my answer.
Yeah, that's fair.
And I think we've seen a little bit of that, and like the tariffs are bad, but I mean it's not after adjusting to the COVID shocks, like
Mhm.
adjusting to an extra 10% or 20% tariffs. Oh man, what if it's, if you're in those industries, what a pain. And I can't,
Yeah.
the headaches that those that you get, I'm sure they're terrible. They're not fun. But I just think in terms of damage, but yeah, dumb,
Hmm.
no, I mean, it's tough for me to argue against your call of
Yeah,
tariffs
no,
on that.
I will say I'm fully defining my dumb policy as you knew it was dumb before you did it and you
Yeah.
did it anyway.
Yeah.
Versus the other one, maybe there was maybe. But so Matt, in terms of the economy, I do want to talk, I want to pivot for a second in this because I
Sure.
think one of my favorite teaching opportunities about the pandemic is a really cool chance just to talk to students about how things are measured and
Hmm.
sort of the process of measuring things. Because so those of you who are listening in, the I will say the generic way leading up to the pandemic, and maybe actually this is also part of like a big change that came out of the pandemic. Prior to the pandemic, the main way that economists thought about measuring recessions was two consecutive quarters of negative
Hmm.
growth. The
Yep.
economy declines basically over a 6 month period. However, one of the things from, and again, I'm going to say this purely from a teaching moment, one of the things that
Yeah.
was really interesting was that in like April and May, when everything crashed, you knew this is a recession. Like it is
Yeah.
definitely a recession
Yep.
because the economy is crashing, and yet we don't have this sort of 2 month wait. Like we know it's happening immediately. If you go back and look at the actual dates, and when this goes back to the weirdness of it, if you
Yep.
look at the formal dates, and I'm going to pull this up as we talk, the formal dates for the COVID recession don't line up with sort of the definitions of what we would say like living in a recession is. And
Hmm.
so if I think if you asked anybody, what does it mean to be in a recession? Well, actually, what's the joke that people always give is
Oh,
if you lose your
recession
job,
is when my neighbor's unemployed, and a
yeah,
depression is when I'm unemployed, or
what am
something
I?
like that.
Yes,
Yeah.
it's that, right? So one of the things that's interesting is that if you look at the dates for the recession, for the pandemic recession, it is technically, and I'll say technically, even though this isn't like a real government organization either, but the National Bureau of Economic Research is generally the group that is charged
Yep.
with finding the dates of the recession. They said that the pandemic recession was from February 2020 to April 2020.
Yeah.
The end.
Two
That's
months.
it. We had a 2 month recession. But one of the things that was really neat about teaching during the pandemic was that technically that is the recession because starting in April or in May, the economy was not shrinking. It was growing.
Unemployment was dropping.
Unemployment was getting lower. The economy
Yep.
is growing from its April point. I don't remember actually how long. I mean, it took a long time. It took several months beyond April. I don't have the exact numbers on me. But just from like a teaching opportunity, like it's such a cool chance to one talk about this idea that like what does it feel like to know you're in a recession before the recession comes out? But then also to be able to talk to students about like like when an economist says there's a recession, what does that actually
Yep.
mean versus how do people actually feel about the recession? And we saw that I think coming out of 2020, 2021,
Yeah.
2022. What are some of the one of the big phrases was K-shaped recoveries. We had the Great Resignation. There were some other like big phrases of like how our economy has changed. I think that's one of
Sure.
the, from a teaching standpoint, a really cool thing that came out of the pandemic was to be able to talk about it. And then it goes back to the conversation you and I had in a previous episode where we had that spike in inflation. We had drops, I think two consecutive quarters. I think the
Of
second
GDP
quarter,
dropped. Yep.
yeah, it
Yep.
got revised later, but in the moment we had two consecutive quarters drop. And then
Yeah.
suddenly we go, this isn't a recession.
Yeah.
And
Yeah.
it like wildly changed how we define things. So
Yeah.
I think from a maybe a teaching standpoint, that was one of the cool things that came out of the pandemic was getting to think about that and share that with students.
Yeah, no, I would agree. That's interesting. I mean, when COVID hit, it was clearly a recession. I mean, it was a weird one in the
Mhm.
sense that this external event just prevented people from working.
Yeah.
And then it basically took about 2 years. I'm just looking at the data now. So it took about
Okay,
two
good.
years. By March 22, the unemployment rate was back down to 3.7%. But that year, the average median income for families dropped. So my argument there is, look, we're not losing it on the unemployment end, but we're losing it on the income end. And if
Hmm.
we saw GDP drop for two quarters, and then but we're like, well, this doesn't count because unemployment rate is low. And yeah, that's
Yeah.
usually been the standard. If GDP drops, you usually see, you know, unemployment goes up. But we saw this weird thing where it was not the unemployment going up, it was the average household was just still working, but now poorer
You know,
for a while. So
as you said that, perhaps that's how I would describe the economy of the 2020s, is it was just very weird and it did not respond in ways that you would
hmm,
expect. So take the tariffs, for example, this massive news. We're going to start
yeah,
taxing people. Stock markets didn't really, I mean, they reacted some, but there wasn't like a major crash of the stock market when that happened. Government
yeah,
shut down several times. Eh, everything's still kind of run. I'll take you back to another thing that happened a couple years ago. We had a major bank run a couple years ago. The Silicon
yeah,
Valley bank run didn't. It was the largest collapse of a. I don't. It wasn't a very large. So okay, let me back up. It is a big bank. It is not a bank that I think most of our listeners knew about. I think if you were in California or you're in the tech space, you probably knew it more. But it was the largest
sure,
bank
sure.
since the 2008 financial crisis. The economy sort of, or the stock market just sort of went, okay, we're gonna keep going.
Yeah, yeah, it's all okay. It's all
It's
okay. Yeah, there's disruption after disruption, and the stock market keeps going up. Thinking through things, a couple other things. Yeah, what's happened with the stock market? Another thing to talk about, the stock market just kept accelerating. And
yeah.
even right after, I mean, there was a couple months where it dropped right as COVID was hitting.
Hmm.
And by the time that the pandemic actually hit, if you waited like when the world shut down, if you just put all your money, I mean, you would have gotten an amazing return that day because all of the losses had been factored in.
Yeah.
So the stock market has been incredible, despite, you're right, tariffs, despite COVID. I mean, I think some of the argument the stock market will tend to be bigger companies, and bigger companies could perhaps adjust a little bit better to these shocks. But a different shock that you mentioned earlier, right? The Great Resignation. There was a time where it was tough to find good workers, and yet companies were still able to keep churning out pretty decent sized profits and increase the profits. So those could go up. Uh, the we touched on it briefly. If we're going to talk about what's happened this decade, real median household incomes are at a record high, according to
Hmm.
Fred. I'm sure our listeners who are economists, I'm sure know of St. Louis Federal Reserve's amazing database, but just wonderful charts on not every economic topic, but pretty close to it. So it's
Yeah.
80. The 83,730 is the most recent year I'm seeing on Fred's chart, which is a high. 2019 was close to this. So it's like we finally just exceeded the 2019 real median income. But that's
Hmm.
so incomes and those have shot up quite a bit. The low was 79,500, and these are inflation adjusted dollars. So that's up. That's shot up several $1,000s since 2022, right? I mean, $4,000 per household since 2022. That's pretty impressive. Uh, the other part, and want to be gentle around this. I don't want to bring up bad memories for you in case this has affected you. I guess I don't know how you
I was,
purchased your house,
ooh, wait,
but
hold on a second. Let me squeeze something in here because you
yeah,
talked
yeah,
about median
please.
household income, right?
Yeah.
I also
Uh-huh.
want to say, because I think a lot of people will listen and say, well, that's just a bunch of rich people getting richer. While you were talking, I pulled up the lowest 20%. So
Yep.
what's happened at the bottom of the income distribution, that has also gone up since 2020.
Yep.
At the lowest level, so this is income before taxes, it was at $4,000. This probably is, I was not prepared, annual.
Okay.
And then currently up to 5,172. So it's
So that's
not,
up. So lowest is up. Median is middle household. That's up. We haven't looked up the 75th percentile. I would
it's
imagine
up.
they're
It's
doing
up.
okay
It's
too. They're
up.
doing
They're fine.
okay.
It's
Yeah,
up.
they're doing
I don't need to look
okay.
at. I don't want to look at that one. That's gonna make me
Yeah.
sad. It's up. So sorry,
Um,
Matt. Yes, ask me about buying a house. I'll definitely talk
no, I
about it.
mean real. So interest rates, right? We had about a decade where interest rates were incredibly low, and now they are
Yeah,
no longer, 2, 3, 4%. I don't know. You don't have to share if you don't want to, but
it's high. I think it's. Oh, I want to say it's around six,
yeah.
5.5 or
Um,
six, maybe.
which admittedly, when I bought, I bought a house in grad school for the few years
Hmm.
we lived there, and I think our rate in grad school was 7%,
Okay.
and our rate in when we moved when I got my first job post grad school in Raleigh was 6%, I believe.
Okay.
And those just felt normal because it'd been on a decline for
Yeah.
years, but then it just, kept dropping year in, year out forever, basically, until the pandemic. So high interest rates, a little bit tougher to buy a new home.
I keep trying to remind myself that it was way worse 30 years ago,
Yeah,
that the interest rates were significantly higher. And while this is really tough, I'm also very
yeah,
fortunate that I have a job that allows me to purchase a home. And but also, and I kind of try to tell myself this over and over. I have a very stable income.
sure,
And
sure.
I get paid the same thing every 2 weeks. And for the most part, I have at least a year's worth of employment guaranteed ahead of me. I realistically have more than a year, but
Yeah,
I don't have like I'm not gonna suddenly be fired in October
yeah,
for
yeah.
just because the company wants to.
Yep,
Yeah, so
yep.
I try to remind myself of that. But yeah, home prices are definitely higher. One of the weird
And
things I think that we saw throughout a lot of the inflation stuff was increases in inflation for things that people were not used to seeing increases for. So one that comes to the back of my mind really fast is like used cars. That was
yeah,
just something because of the pandemic and the chip shortages, not being able to produce new cars. Now
yep,
used cars are more valuable, and that used to be something just really reliable that you could get. We saw the egg. I mean, the egg stuff. Obviously, I think that's probably going to be a good headline for a while. It's just egg
yeah.
inflation.
The temporary eggflation and I mean, yeah, a lot of groceries have gone up in prices, have gone up
Grocery
in
inflation.
general, which we just didn't see for a long time. And that's stabilized, but I don't think we've seen
Hmm.
significant grocery deflation. I don't think they've
Hmm.
necessarily come back down, but it has stabilized a bit. But I really like what you mentioned about how, if we're summarizing the decade, it's just been weird, a weird
It's been a
decade.
weird, yeah.
And the interest rates on the homes, I was talking to somebody, an alum from Susquehanna, and she mentioned how they had, they'd been talking like they were going to move to a different place.
Hmm.
They'd bought their place though in like 2018, 2019, and they have a nice place. I don't know exactly what it is, but they do well, so I'm sure it's a very nice place in a nice neighborhood. Um, well, of course, they have like a 2.5% interest rate. And if they were to sell and try to buy something else, they're going to get a massive one. So instead of selling, they're spending a lot of money to renovate this to be their dream home instead of going out and buying a new dream home. And the
Yeah.
that spike in interest rates really puts an incentive for people not to sell their houses. And that's just
Hmm.
a weird distortion that basically, at least I don't know about ever in the United States. It might literally be ever in the United States, but certainly in our lifetimes, we've never had this issue where people have been like, I'd really rather move. And the list price is fine, but I'm going to have to pay 6% interest versus 3% interest. And if it's on, let's say, $300,000, that's an extra $9,000 a year. And I don't, and they'll say, look, I don't want to pay an extra
Yeah.
$750 every single month. It's just a weird dynamic that we've had to
you
face
know
in this
and
country.
there's two things. I'll go back to the pandemic for one, but the other thing is while they're updating and renovating their home, when they do eventually sell it, it's now more expensive for the next person who's buying a used home.
Yeah,
And so it's hitting like the second home market, or not second home, but the not new construction market, right? The previously lived in homes. But
yeah.
I remember this even during the pandemic. I don't know if did you make home renovations during the pandemic while you were stuck at home? This
Not
was
really.
I remember this
No.
being a big headline that
Yeah.
like hardware stores were like running out of lumber because people were going out buying construction. They were bored at
Yeah.
home. So they're
Yep.
like, let's renovate this house. I have not, they couldn't move, right? Because they weren't,
Yep. No, no,
they,
yeah,
if
they
they had
could.
jobs, they weren't. So I can tell you from personal experience, I was not looking for a new job in the middle of the pandemic.
Yeah.
And so, right, renovating homes and now homes are suddenly at
Yep.
a higher value and interest rates are going up.
Yeah.
Matt, I did pull it up. My current interest rate, I really need to refinance. I think this is what this tells me. I'm at 6.875%.
Okay. Can you cut it by a point or more?
That's
I
what
think that's
I
not
need
the
to, I do
might
get
be
these
worth a
emails
touch.
about like they've already started to do because they did have rate cuts, I think, earlier in the
Yeah,
year, and
yeah,
but
yeah. No, that'd be interesting. No, I remember we had a time where they gave everybody a week off from Susquehanna. Like, everybody's killing themselves. We're gonna just take this week. And
mhm,
I kind of learned to golf. I poorly, but I learned how to golf poorly. I played some more golf, and then I built a little box, just a
yeah,
wood box to store our stuff. And I don't even know that I built it that well, but that was about the extent of my home renovation. That's about as
okay,
talented as I have. And um, I also realized, whoa, it's an expensive time to renovate a home right now, where the optimal time is when things were a struggle. We actually had our basement put in. We had when in this house that was unfinished, we
mhm,
we did the basement shortly after the Great Recession hit, and that was a great time because we got a pretty good deal on a contractor who was really thrilled to get a pretty big project from us at that time. But
yeah,
we were certainly not getting price gouged there by them, and even if they're not maybe making as much as they would have been making 2 years ago, they were thrilled with the business and very appreciative and just good people. So
yeah.
that's I if you're lucky enough to have stable incomes, as you mentioned before, sometimes those opportunities can come up where you're like, oh,
Yeah.
this is really the right opportunity.
It reminds me, I think we've talked about the finan have you ever read the book Financial Diaries?
I don't think so.
Absolutely fascinating book.
Okay.
It's older for sure. Uh, I wish they would redo it. So it's called Financial Diaries: How American Families Cope in a World of Uncertainty, by Jonathan Murdoch. And
Okay.
it is, they sent out hundreds of diaries for people to keep track of their spending. And one of the big ones that comes out of that is that one of the things that is really challenging for low income families is the volatility of income because their bills are coming at the exact same time every month. Mortgage, rent,
Okay.
gasoline's roughly the same, right? Your costs are relatively the same. And
Yeah.
in an economic sense, we always say, oh, just income smooth. And that's very hard for people to actually do
Yeah.
when you do have these big swings and stuff. So it's a very good. I'll say that for my pop culture. It's not really pop culture, but it's very good. Matt, let
Yeah.
me end on a big change in this decade for consumers. So maybe that's how
Okay.
we can start. So for those listening, Matt and I clearly have not planned out how these decades are going, but we felt comfortable enough to start with the 2020s. Maybe
Yeah.
we
We'll
should
do a
try to
little
do
more
it.
research before the 2010s.
I
So
wouldn't even say research. I think as long as we kind of hit, like, what do you think the big economic event is? What do
yeah.
you think a policy, maybe a good policy and a bad policy? What changed the most in our finances? What changed the labor market?
Yep.
What changed consumers, right? I think we can have five
Sure.
things.
Sure.
Let me give you what I see as the biggest change for consumers of the 2020s, and that is online shopping's not the right answer here, but like mobile ordering. So the ability to order your food and pick it up, the ability to
Hmm.
order your groceries from Kroger, your ability to get an order from Target. I think that's probably the biggest change, and it's going to come, I think, mostly from the pandemic because everything was online ordering for to limit contact, and that has stuck around. I remember
Yeah.
there were places
Yeah.
that like you just could not order, like you couldn't order ahead at most places. You could order it to go, but you couldn't always like order like on an app, swing by,
Yeah.
pick it up
Yeah.
as well. And I would say that's probably the biggest change that a lot of us take for granted. I do not order groceries online. I prefer to, I actually like shopping for groceries.
Yeah.
But
Yeah.
I
I
know
do
there's,
too.
right, there's lots of people who have been able to benefit just from being able to have groceries delivered or picked up. I'd say that's my biggest change for consumers.
Yeah. And
I'm not
I
going to
say
say AI, not AI.
I do like going to grocery stores to pick them
Yes.
up. And I think that's a bit of a thing in common of our two grad schools, which are econ
Mhm.
but had a heavy ag focus. I just learned to appreciate and kind of marvel at grocery stores a little bit
Yeah.
more. Although we do a lot. We got a free Walmart Plus
Okay.
subscription through, I think it was through our phone one time. Yeah, you get a year of Walmart
Yeah.
Plus. Oh my gosh, the delivery. And yeah, you tip them whatever, you tip $10 or something for somebody to bring you the groceries. But oh man, it's incredible. They just show
Yeah.
it's on your door. That is pretty awesome. And you're right, the meals being different. I mean, yeah, it
Mm, I
accelerated the mobile ordering revolution. If maybe it
yeah.
didn't cause
That
it, but it certainly accelerated it.
that's a better way to phrase it, right? Even your like I'm actually yes, so McDonald's had an app that you could order from before the pandemic. Big companies, I'm not surprised they had mobile ordering.
Yeah.
But it's weird if I look up a restaurant that doesn't allow me to order online and come pick it up. Your local neighborhood
Yeah.
Chinese restaurant probably has
Yeah.
online ordering, which they never would have done before the pandemic. You
No,
would have
you're
had to
right.
call and order. You can order it online now.
You're right. And so, do you know where Liverpool, Pennsylvania is?
No, I do not.
Okay,
I
so
thought you were gonna say England, and I was like,
no,
yeah,
no.
I know
You know
Liverpool.
of Liverpool, England.
Okay,
Um, Liverpool, Pennsylvania, it's about a 20 minutes south of Selinsgrove towards
okay.
Harrisburg. So we went there for dinner. There's a really nice Old Trail Tavern. Give them a shout out. It's a nice, it's a really nice place.
Mhm.
And I hope this doesn't sound snobby. You just wouldn't expect a place like I didn't expect a place like this in Liverpool, Pennsylvania, until so many people told me how great it was. I called them to say, "Hey, do you do reservations?" I'm like, "Oh, well, yeah, but you just got to go online to do the
Online.
reservation. They're not going to do it by hand.
Yeah,
I mean, like, come on."
yeah,
And this
yeah.
is Old Trail Tavern, one-off restaurant. It's not a chain in Liverpool, Pennsylvania.
You
So
know, and this is where I'm gonna sound like a good millennial. I actually like QR codes at the table, so
okay,
I'll
okay,
say that very quietly because I know that that is a contentious item. But
yeah,
I mean I look at it as if you have one of those, that means you probably have a menu online that I can look at before I go to see what I want to get. But it also probably tells me you're probably updating stuff and you are more willing to like change menus around rather than just having the exact same thing you've served every single time over and over and over again.
yeah,
I I try so many new places because they have an online presence. I can see what they have
yeah,
available. And this is one of my I'm going to call it a bad habit. It's not that I don't like talking to people. I clearly do. I enjoy having conversations with people. But there is something really nice even for like Jimmy John's to be able to go to their app, look at the sandwich and all the customization options and turn every single part on, send it and then just sit outside and wait 10
okay,
minutes for
yeah,
my food to be made. Because
love it.
if I have to go in, then I'm like awkwardly standing there going, do I want, no, let me take this off. I like to be able to just look at it and send basically my perfect order to them,
Yeah.
wait, and then go pick it up.
Yeah. Very cool. Very cool. So you said you had your pop culture saved for this.
Well, I was gonna do this book. This book feels like the right book, but I don't know that it's necessarily pop culture.
Go for it. I
Uh,
can do it. I've got a clip. I don't know that it's quite related to 2020s, but I have a couple things to that I could share. So
So then let me give a shout out to Jonathan Murdoch and Rachel Snyder. I will go with the book, even though it's not, it's an econ nonfiction book. It's called The Financial Diaries. They basically survey a bunch of people. It's part of a much larger project. They followed 235 low and middle income families throughout the country, tracking how they spend money, what are their challenges. Each chapter is a little different. Like it's like here's how spending affects people,
yeah,
here's how borrowing affects people's savings. And you just get to meet a lot of really interesting people and think about. For me, I remember really being touched by just not fully appreciating how nice it is to have a stable income, and that truly is sort of. There's a lot of people. Yeah, I think one of the people they interviewed was a actually, one of them was a casino dealer. That's the one that comes to mind first. A
huh,
casino dealer outside of a college town that I think is like Ole Miss or something, or Mississippi State maybe. And so it
yeah,
talked
yeah.
about how they would just make tons of money 6 weekends out of the year, and then basically the other weekends make nothing. And like if you don't get to work one of those weekends, that could like wreck your entire month and stuff. And so it's really
Yeah.
interesting to think about.
I made a note.
I think you'd
Try
really
to
like it. It's a good
try to
book.
read a little more in the summer, so
Yeah.
that's always good. That's always good. Well, I'm working on a couple different papers that the one of them is we I own the domain pop culture politics now. And it's
Okay.
essentially I'm working with a political science friend. Don't go to it yet. It's not ready, but it's under construction. It's ugly, but it's
Okay.
got some stuff there. Um, but it's kind of the same idea of what we've done with economics, but
Yeah.
that revolution of using pop culture hasn't hit a lot of other disciplines. So I'm working with a political science friend on who are actually two friends from Susquehanna, and we're kind of try to write up some ways to do that. I'm working on that. And I'm actually working on one for that's a little bit more accounting focused with a
Yeah.
friend. So I'll go with a couple accounting ones that also kind of tie into econ. But one is from The Office, and I'm going to send this to a good friend Dan Keister because it is not on economics of The Office. But there's there's a time where how familiar with The Office are you, Jadrian? I don't know how many
I've seen every episode.
every episode.
Like
Okay.
I'm not a super fan, but I've seen
Yeah,
every
yeah, yeah.
episode
Okay.
and I've
So
seen them a few times.
that's I would think you could call yourself a super fan if you're that. I think I've there've been a few between after Michael Scott left that I haven't seen, but
Yeah,
I think before he left, I've probably seen them all multiple times. I don't know how many. But there is one where Michael Scott decides to be Willy Wonka and give out golden tickets. And you're nodding, you recall this, and some,
yeah,
doesn't all go right. But it's an interesting point of how does that liability show up on a balance sheet? When you throw
okay,
something randomly into a box of paper to say you just got 10% off your order, how do you factor this in
hmm,
to your balance sheet? So that's one part where we're
great,
that's it's a little bit, it's demand and supply, but the
yeah,
other part, and I couldn't believe nothing on this was on Critical Commons, but maybe our age difference means you haven't seen this or you don't like this, but have you seen Office Space?
yes.
Okay.
That's not
Which
that old,
I know
is
it's
it?
not that old, but it's one of those I would have probably been
No, that's a
24 when it came
1999.
out.
That's a cult classic.
It is a cult classic. Um, talking about what are clips for auditing. Well, the
Hmm.
Bobs are these external
Okay.
auditors looking at the work. And we'll put these clips in. I imagine many of you have
Uh,
seen it, although it is cult classic, so many might not have. But Office Space, it's just a story about this office and how it works. And they bring in these consultants, which are supposed to be
mhm.
like McKinsey folks, they say. And they're just trying to figure out how everybody works. And
Yeah.
um, it's just pretty, the clips are pretty funny on there. And the two Bobs, as they call them, because they both
Hmm.
have the first name Bob. And so I have a clip where they're interrogating a guy who um, doesn't, he brings the order from the engineer or from the customers to the engineers, but he doesn't actually talk to either the customers or the engineers before he starts yelling at the consultants to say what the hell is wrong with you? I have great people skills over and over. And but just a couple clips that a couple things I've been digging up that are not quite well, they're econ-y.
Yeah. Hey,
They both have econ ties to them between
I like it.
consulting and business improvement and the
Let me
liabilities on a discount.
Let me put a reference for you because a friend of mine, and I'll
Yeah.
call him an online friend of mine, Michael Miller at UTSA,
Okay.
has been actually working on this for a couple of years. Not what you're doing,
Cool.
but he's a sociologist, and he emailed me like before the pandemic. Basically, like we went back and forth. He's like, "Why does econ have such great online video repositories and no other discipline does?" And so he has a series of papers in just general interest pedagogy
Yeah.
journals about basically a lack of resources for sociology,
Yeah.
psychology,
Yeah.
history, political science, things like that. So,
So the site, by the time this comes out, it'll be just a bit better. The site is still ugly, so
yeah,
forgive us if you go to it and you're like, oh, this is ugly. Like I say that our person doing it's done a great job, but it's being put together right
yeah,
now, so it's not complete. But we're throwing it up there, and it's going to be a nice resource, right? We want better teaching all around, and it's kind of cool. So, uh,
sounds good.
how was the beer?
Very good. I have just one. I've been saving. There's one sip
Uh,
left in here, so I'll finish that in a second.
yeah, if we have those self-control tests, you pass it better than I pass it because mine is long gone. But well, thank you to everybody for tuning in. Did we miss something in the
Yes.
2020s we should have talked about? Please comment. Once again, huge shout out. We've been getting all sorts of new subscribers on Substack, and that's yeah, we'd love to see it. So appreciate everybody.
Cheers,
Any
man.
cheers.
I had nothing else. Cheers.
Nothing else. Nothing else. Cheers. Stop recording.